Welcome to Applied Mortgage Academy. We are here to learn about home buying. You're in the right spot if that's what you're looking to do. I'm Lindsay LaBonte and our branch manager here on the Applied Mortgage team. So, we're going to learn how to be best prepared. Where are rates going? Will we see more homes for sale? And what has been happening with home prices? Those are typically the most common questions I get. I've been helping home buyers and homeowners for the last 20 years, and it can be tricky to know where to start. So it's helpful to be prepared and know where the market is. By the way, any questions that you have during this presentation, I should have kept this first screen up a bit longer. My cell phone number and email address is here. You can also drop any questions in the question and answer section and the chat, although chat may have been disabled, so it may just be the Q&A section that's available. If you're listening to this on a recording, of course, just reach out, phone, email, no questions too big or too small. So I was talking to somebody earlier and they were thinking about buying a house, and we were just chit-chatting about the market and what's been going on. And they were saying, well, I learned this from my parents and I think I need to do that, but I'm not sure. And my best friend did this 5 years ago. And you get all this information. And at the end of the conversation, she just said, wow, this is not my mom's housing market. And I thought it was so perfect because the market's changed so drastically, even just in the last 5 years. And that's typical. It was different to buy a house in 2018 than it was in 2021 than it is now in 2026. So doing what you're doing now and just learning about the process is really important. And I think what people oftentimes assimilate buying a house to is buying a car, because that's sort of the maybe biggest purchase that you've done other than a house maybe is a car. And it's also very different than that. When you go in to buy a car, it like happens pretty much that same day. You go over all the numbers really quick. You don't even know what your payment's going to be until you've already signed everything. It's all, a little crazy. But buying a house does not have to feel like that. You get pre-approved first, you get all the numbers, it should feel really comfortable. So my suggestions always are just to really think about these goals. Your budget, what are you actually comfortable paying on a monthly basis and out of pocket for a house? What are your goals for the property itself as far as your wants and needs, location, property type, that kind of stuff? And once you've kind of thought about that a little bit, then get with a good lender, a good loan officer like our team, and go over those goals and needs and wishes and wants and figure out what are you actually able to do. And then you meet with a real estate agent and you can let them know, hey, I'm actually able to do this. Go look at houses from there and you'll be ready to home search. So, real quick, the role of your mortgage team is really to be advising you on your mortgage, not just now when you're trying to buy a house, but after you own your home too, right? Your home becomes probably your biggest asset or one of them, and also maybe the biggest debt you have too. So we like to think of this as really a partnership. We're going to start off by reviewing your goals and financials, and that's just a really simple conversation. We're going to get you pre-approved. So what that means is we're aligning your goals and financials with the mortgage programs that are available. That lets you go out and actually search for a home. So while you're home searching, we're going to keep you updated on trends and mortgage programs and help you with your budgets as you find houses you like and all that kind of stuff. Then when you find your home that you want to buy, we're going to get you that mortgage and get you into that home. And then after you own the home, we keep providing support. We do annual mortgage reviews. We tell you how the market's doing, what are interest rates like, what are home prices like. You may want to, at some point, change that mortgage that you have. Maybe you want to buy another house, or maybe you want to redo the mortgage that's on that property you just bought. And then the cycle just goes around another time, right? The next time you're going to buy a house. So you want to feel really good about the realtor you're working with, the lender you're working with, everybody that's involved, so that you can continue to be able to maintain your house and build more real estate goals or whatever else you want. Now, sometimes people fall into the trap, which is really easy, which is you start scrolling online. If we were in person, I would say raise your hand how many people look at Zillow or Realtor.com or whatever at 3 o'clock in the morning. We're all kind of guilty of it usually once we start looking for houses. So sometimes what happens is you fall in love with the house first, and then you call a realtor because you want to go see it, but they're like, wait, are you even pre-approved? And you've got to backtrack and figure that out. So the best order of operations, even though it's not really the fun part, is to do the financial side of things, do the pre-approval first. So you actually need to be pre-approved in order to make an offer on a house. This goes back to the whole it's not my mom's housing market kind of thing. Because back in the day, your parents or whoever else bought before you went out to a house and kind of shook hands with the real estate agent and then were like, hey, I want to make an offer. And sometimes just verbally that was enough and it came together. Well, now, because there's not a lot of housing inventory and there might be multiple buyers trying to offer on the same property, usually the seller and their realtor don't even want to show you the house unless they know you have your ducks in a row and you're pre-approved and ready to go. Now, you'll hear the term pre-qualification and pre-approval kind of used interchangeably. What really they mean is pre-qualification is usually just an informal conversation, whereas a pre-approval is actually getting your financials vetted. So showing the loan officer your income information, your assets information, doing a credit check, all of that. And then there's also another layer you can do, which is when you go to get your formal mortgage, there's an underwriting team. It sounds kind of scary. It's not. It's kind of like, an audit of all your information to make sure you can really get that mortgage. You can actually do that in advance too. So definitely a pro tip would be finding a lender like us that actually lets you go through that fully underwritten process in advance. All of that is done so that there's no surprises later on, right? That's the whole point of getting pre-approved is that we're saying, yeah, after reviewing all your financials, assuming nothing changes between now and when you find a house, we believe you're going to be able to get that mortgage when the time comes. And that's what you want to know because you don't want to enter into a contract to buy a house and then not be able to get your mortgage later on, right? That's a scary thing. So, what does that first conversation for pre-approval look like? Well, we're going to ask you questions about your goals first, like we talked about, your needs, wants, wishes for the house itself. And then we're going to talk about your financials. It sort of feels like a checkup, financial checkup. So what you want to have sort of gathered, or at least in the forefront of your mind, is income information. So income and employment, savings information. So anything about your assets, and then your credit history and your debt payment information. Now, ultimately, we're going to want to actually look at those physical documents like your pay stubs, W-2s, bank statements, that kind of stuff. We'll do a credit review. But at least for an initial conversation, if you've got an idea of what you've got going on for your financials, then we can let you know what types of actual paperwork we'd want to see from there. The mortgage process is really paperwork heavy. It's really email and e-sign heavy. It doesn't have to be. It can also be in person, but just be prepared. You want to ideally have all these financials kind of at your fingertips so you can easily download them, upload them, save them, email them, whatever else needs to happen throughout the process. And so a lot of people have not really thought much about their budget before buying a house. That might be one of the first times that you really sit down and you think like, okay, what can I pay? What do I want to pay? And so if you want to get a jump start and be really prepared, you want to actually create a budget. And we have a budget worksheet we can send over to you. But just to give you an idea, basically your budget, you're just really going back into your bank account statements and you're listing out how much is going out of your bank account each month and how much is coming into your bank account each month. So you can get an idea of what you can actually afford. You're probably paying your rent or your current mortgage payment, utilities, groceries, healthcare, entertainment, right? Like whatever it is you're paying, literally write every single thing down into a category and you can kind of figure out the average that you're spending in that category each month. And then you'll be able to tell, what do you have left over? Can you pay a mortgage that's more than what your rent is right now? Or do you really need to kind of keep that the same or less than it currently is? Because when you meet with a loan officer, ultimately, we're going to tell you what you're qualified to do, but you've got to actually be comfortable making that payment. And I want to just show you what an example of a payment may actually look like. Now, this is totally pulled out of thin air, right? We are just using roughly the purchase price. Well, it's not thin air. The average kind of median, I should say, price in Hampshire County in Western Massachusetts, where I'm located right now, is around $425,000. So I grabbed that for the price. I want to just show you what a real budget might look like because sometimes you don't even see this until you've already um, applied for a pre-approval. So it's nice to just get a little sneak peek. So when you're thinking about your budget, you're going to have the purchase price of the house. You're going to have some sort of upfront cost. That's called your down payment. And you're also going to have some closing costs, taxes, insurance, like everything else you pay. We'll talk about that in a minute. I want to focus more on the monthly payment side of things right now. So in this illustration, this person was able to put a good size down payment down 15%. By the way, that's not required. We'll talk about minimums. But based on where the rate was when they did this purchase, then the total monthly payment included the principal and interest they actually pay back on that mortgage, plus estimated insurance, real estate taxes that you pay for the town. This insurance, by the way, is homeowners insurance. So you'd set that up with your own insurance agent. The tax figure is whatever the town or the city is charging you for real estate taxes. And then whenever you put less than 20% down, you're going to have some sort of mortgage insurance that you pay. People call that PMI. So you're going to get a little bit of jargon in this class as we're talking about what is possible. But principal and interest, you want to know that's what you're actually paying back on your mortgage balance and toward the interest. Homeowners insurance, real estate taxes, maybe you have PMI depending how much you're putting down. So in this case, this person's borrowing $361,250 for their loan amount, and their total payment with everything all included is $3,113 per month. Now, when we went back to this budgeting slide, in addition to your mortgage payment, you've got all these other things, right, to keep track of. So if your loan officer tells you, hey, you're qualified for, $3,100 a month, well, just because you're qualified for it doesn't mean that you have to do it, right? You might say, well, we only actually want to pay $2,500 a month or whatever you feel comfortable with. And if that's the case, then you're going to have to adjust the purchase price or the down payment or whatever to fit within that comfortable expense. Credit scores. So we'll talk about credit scores as a part of your pre-approval process. Credit scores are one of the major factors that impacts your interest rate. So out of everything, when you're thinking about income, savings, credit history, really focus on your credit scores. For most mortgage programs, well, the best category, like Ivy League school SAT score category, is going to be 780 or above for credit scores. Now, if you're on this webinar right now and you don't have 780 or above, don't panic. There are programs that go down into the 600s or even the upper 500s. So an ideal situation is 700s, but it's okay if you're not there yet. The credit scoring algorithm can feel a little bit like a mystery, and it can be really frustrating because, frankly, when you go and you check some of the consumer credit reporting companies that you can view online to view your scores, they're not always accurate to what we will check on the mortgage side of the puzzle. But generally speaking, the most important piece is the payment history, of course, making sure you pay everything on time, followed by credit utilization, which means if you have credit cards, you want to keep the credit card balances nice and low. So if your credit limit is, I don't know, $2,000, you don't want to charge it up to $2,000 and keep a balance on there. You want to charge it to maybe maximum 500, pay it off, charge it, pay it off, charge it, pay it off, right? The algorithm wants to see that you're using credit cards appropriately like that and not just carrying balances on them all the time. I know this is a lot easier said than done, but I'm just telling you all the tips and tricks. They don't like to see that you're opening or closing, for that matter, new accounts. So basically, once you've established a few credit accounts, like maybe a car loan, maybe you have student loans, maybe one or two credit cards, just keep it all the same and keep it open. Length of credit history is important. So if you're always closing accounts, that's an issue. And then lastly, credit mix. So they like to see, the algorithm likes it when you have a mix of different types of accounts, open-ended like credit cards or close-ended like loans. I know we're flying through this. This is all just little tidbits and hearing it, once and then you'll hear it again when we do the mortgage consultation. But this is a under 30-minute crash course here, at least to get you started. So, assets, cash to close, how much you actually need out of pocket. The down payment, like we kind of looked at back on our chart a few slides ago, that's how much you're actually putting toward the purchase price. There are plenty of loan programs that let you do little money down. A lot of times people, back to the not your mom's housing market, think you have to put down 20%. If you're buying this house as your primary residence that you're going to live in, you do not have to have 20% down. There's programs that are 3% down for first-time home buyers. Some are even no money down, depending on the loan program. There's down payment assistance out there potentially if you qualify for it. So you want to have some savings, but depending on the type of mortgage you use, will determine how much you actually need to use. In addition to the down payment that you're actually paying toward the house purchase, you're also going to have closing costs, taxes, insurance, like everything you pay when you buy the house. Lender services, attorney services, appraisal, inspection, credit report, taxes, insurance, everything that goes into buying a house. I usually figure as a rough measure, if you can have as a goal, this is like big pie in the sky goal. If you can have 3% of whatever purchase price you're aiming toward saved for down payment, and then if you can have another 3% saved toward closing costs, taxes, insurance, all that kind of stuff, that's a really solid number to have available. Now, again, you don't necessarily need all of that, but let's say you want to buy a house for $300,000. You'd want $9,000 for the 3% down payment and maybe another $9,000 for all the closing costs, prepaid expenses. So having about 18 or maybe rounded up to 20 is a really, really solid savings goal. Now remember, there are ways to get that paid. So if you're sitting there thinking, oh my gosh, I'm never going to save $20,000. This lady is absolutely insane. I don't know what she's thinking. This is a terrible webinar. Well, there are other strategies. You may be able to get the seller to cover some of the costs for you. You may be able to utilize down payment assistance programs, employer assistance programs. Maybe family members have gift funds. Maybe you've got access to retirement accounts. So it's really important to do some of this research. Down payment assistance also does not always mean that you don't have money saved. Some people choose to use or have access to using down payment assistance programs even when they do have a lot of money available. For example, a lot of where I am in Western Massachusetts, the 5 college system, a lot of the colleges have employer assistance programs where they actually give substantial down payment as a second mortgage for some of their employees. So down payment assistance programs range in all different types and sizes and availability. While you're house searching, while you're thinking about buying a house, while you're getting pre-approved, while you are buying a house, basically, I always say be super boring. So what do I mean? Well, keep everything the same as far as your financials. So keep all your bills paid on time, use all your accounts like you normally would, don't miss payments. Cash is not king when you're buying a house. What I mean is if you're depositing cash into your bank accounts, mortgage companies don't like to see that. So if you've got a job where you get a lot of tips or you do some work on the side or you just have been saving money in your mattress for a little while, we want to talk about that first because everything that goes into your bank account has to be able to be tracked because of the anti-money laundering rules. So basically, work on your savings first, work on your credit, keep everything really solid, keep your income and employment history really solid, and try not to make any changes there while you're buying a house. If you do, just tell us, tell your loan officer. Don't try to hide it because that's when issues come up later on. All right, mortgage rates. So we saw on our chart way back that I did, that I showed you. I'm going to show you some updates as far as where mortgage rates actually are because that impacts your monthly payment, of course. So everybody's hoping that rates come down to our pandemic levels that we had, but is that going to happen? Probably not until inflation is actually under control. So these are just some quotes and mortgage rates projections I'm going to speed through. I want to actually show you this grid because this is pretty cool. I would encourage you to bookmark mortgagenewsdaily.com. Mortgagenewsdaily.com. It is not, we are not affiliated with this website at all. What this does is it just takes a market survey of 30-year fixed rate mortgages, and it tends to be really accurate. So I wanted to show you this so you can see how much rates move all the time. Now, based on the average loan size that I see, again, I'm here in Western Massachusetts. It may be different if you're in other areas of the country, but we see mortgages around maybe 300, 330,000, kind of our average. Mortgage rates move in about 1/4% increments or 1/8% increments, even on a daily basis, like you can see on this chart, right? Little up and down. So for every 1/4% change in rate, if you're borrowing a $300,000 loan, it only changes your payment by about $50 a month. And I know I'm saying only. I mean, that's not nothing. I get it. But it probably isn't the difference between buying the house or not buying the house. So all that to say, when you're going over your budget and you're doing your pre-approval, your mortgage rate is not protected while you're searching for a house. It changes all the time. Once you actually have the house under contract, that's the point where you can talk to your loan officer about actually locking and protecting the interest rate. So, say, for example, you started looking at houses last year at this time, rates were above 7%. And this year, now they're basically a whole percent lower. That's great. So that's going to mean that you can probably expect that your payment would be, maybe as much as $200 lower this year compared to last year. Now, if you started looking for a house here when we had this nice little low, and now you find a house and the rate's up here, maybe like a 0.5% change or 1/4% change, then you just want to be prepared that your monthly budget may be higher by $50 or $100 a month or whatever it is based on your loan amount. So keep in mind while you're house searching, the budgets are just projections. And so you may want to leave yourself a little buffer knowing that your rate is not going to be locked in until you actually have the house under contract. Your loan officer will be available if you're working with our team to give you updated budgets ahead of making an offer. So you don't have to tell us, but we like it when you tell us. If you really see a house you like, before you put that offer in, just give us a heads up and we can let you know, have rates changed at all since we did your pre-approval? What does that payment look like? You can make sure you're comfortable and ready to offer on that home. You're going to hear a lot on the news about the federal funds rate, and probably especially because the Federal Reserve chair is likely turning over in May. So you'll probably hear a lot more on the news about federal funds rates and are there rate cuts and what's going on. Just so that it's clear, the federal funds rate is not the same as mortgage rates. So the federal funds rate controls the rate at which banks are lending money to each other. It is one of the economic indicators that impacts mortgage rates, but it's not the only thing. So just so that it gets really confusing on the news because they'll say, oh, the Fed cut the rate. That does not mean that mortgage rates have changed necessarily. So it's always a good practice to just check in with your loan officer and you can see where the market is. Or that Mortgage News Daily website that I said to pin, again, will give you some live updates too. And this is just another helpful chart that shows you some examples between changing in rates versus changing in the loan amount. So you can kind of see if you were buying a house and say the loan amount was 400,000, I'm just going to go right in the middle of this chart, and the rate was 6% versus if you were going to only borrow 350 at that same rate, it changes your payment by about $300 per month here. Oops. Sorry about that. I just clicked my clicker. $300 per month change for the 50,000 difference in loan amount. Or you can say, well, if rates are at 6.5, then it's about $150 a month or so difference between 6% and 6.5%. So this is a cheat sheet, but again, best scenario is always just calling your loan officer, sending the property address, going over the specific payments here. There were more houses projected to be sold last year compared to the year before. I need my data for 2026 updated on here, but inventory is still increasing a little bit year over year, which is a good thing. We've seen a little bit less competition that in the past, say 6 months to a year, than we did in the height of the pandemic, where you can see like on this grid, this chart during 2021, inventory got to its lowest levels, and it was really tricky for people making multiple offers and that kind of stuff. Inventory is always cyclical. So you can see that there's always little bumps and ups and downs in what's happening with housing inventory, but it's slowly recovering, which is a good thing. We're not anywhere near a housing crash. So that is another question I get all the time is like, oh my gosh, now on the news it's saying houses are sitting, it's saying there's price corrections happening, is there going to be a crash? Well, during the housing crisis in 2008, there was way too much supply compared to what would be a balanced market, and we're still under what would even be considered a balanced market, nonetheless anywhere near what would be the housing crash, housing financial crisis, all that kind of stuff. Home prices are still projected to increase year over year. So some good news is that there's a little bit more inventory, but nonetheless, still appreciation. So the good news is that if you buy sooner than later, you keep building that wealth. If you're waiting to buy because you're hoping rates might come down, well, every year the property prices are getting higher and higher. And this is historically the case for property values. So this is showing a 5-year gain on how much home prices have changed in the last 5 years. So you can see New England really kind of leads the way with house price increases. And then also over a 30-year time period, then you can see the appreciation that's happened. And again, New England's one of the hotter markets here. So always a good opportunity to own and build that equity and not be waiting to see what happens with rates, because this is more of our local market here. Property prices continue to appreciate. Owning a home makes you 40 times higher net worth than renting. So are there times where it makes sense to wait? Sure. But generally speaking, owning is going to set you up for a better future. And people have a lot of equity in their house. So this is just one last slide just to verify that there's a really big gap between home values and how much people owe, meaning there's not all of a sudden likely to be a bunch of foreclosures on the property or a big housing crash or anything like that. So that pretty much concludes the update on the market. Where are rates? Where are home prices? Where are property inventory levels at? And, one statistic that we hate and we want to see changed is that 51% of people say that they're not really comfortable with their home buying knowledge. So we hope that this at least helped We're always here to answer any questions. This QR code will take you to a complimentary consultation with me or with somebody on my team. You can go ahead and scan that QR code whenever you're ready and at least sign up now or save the link so that you have it when you're ready to go. Any questions that you have, be sure to contact myself or anybody on my team, and we are here for you during your home buying journey. If this was helpful, also please let your friends and family know that we do these webinars. We do them monthly, and they're going to be available and recorded, and we'll send that along to you as well. Thanks so much for tuning in, and I hope you have an awesome afternoon. Can't wait to help you get into your next home. Thanks.